Congratulations, you are pre-approved. If you're watching this video, that means that I have obtained all of the documentation needed to verify what you entered on the loan application, and you are now pre-approved. This means you can go out shopping for a house and make an offer on a property. Now, what's next? What do we do now that you're pre-approved? Well, let's talk about that. First thing we got to do is schedule a meeting. You should have already gotten an email or a text message or both from me with a link to my calendar to schedule a meeting. Please click on that link and schedule a meeting as soon as possible so that we can talk about your pre-approval. This doesn't mean you can't get with your realtor right now and go look at houses. You can look at houses immediately. You don't have to wait until after the meeting, but we do want to schedule a meeting so that we can talk about your pre-approval. So please click on that calendar link, schedule a time for us to have a phone call. If you're not very good with technology, I definitely understand. Just shoot me a text or an email or give me a call, and I will schedule it for you. This QR code right up here in the top right corner will take you to my calendar where you can schedule that meeting. Here's my phone number, my email address, all my contact information right here. But we definitely want to schedule that as soon as possible so I can go over some things. Now, what do we talk about in the meeting? We talk about what you're approved for, the amount you're approved for, what to expect in terms of your monthly payment, and what you would have to bring to closing. Now, that's going to be an estimate. We don't know exactly until you're under contract, but what we can expect, ballpark range, for you to bring to closing. The upfront costs that you need to be prepared to pay for, because when you do go under contract, there are a few upfront expenses. We're going to go over them in this video. We'll go over them in detail in that meeting. The loan process and the do's and don'ts. Also, I'll answer any questions you might have. What you should know now that you're pre-approved. Let's talk about that. There are upfront costs, like I mentioned earlier. They are earnest money, appraisal, and inspection. Earnest money, appraisal, and inspection. 2 out of these 3, you get credit towards your closing costs. 1 out of these 3, you do not. The first 2, earnest money and appraisal, you get a credit towards your closing costs, the money that you're going to bring to closing. The inspection, you do not. Now, earnest money is similar to an apartment security deposit. When you get your first apartment, when you move out of your parents' house and the apartment manager requires you to put a security deposit to hold that unit for you. That's similar to earnest money. It's not exactly the same, but it's showing the seller that you are being serious or earnest. That's why they call it earnest money. So it's usually about 1% of the offer price. It doesn't have to be 1%. It can be more than that. It can be less than that. But on average, it's about 1%. Now, it has to be traceable with a paper trail. You technically can pay for the earnest money with cash, but it makes it a little bit complicated. I can't give you credit towards your closing costs if you pay for it with cash if there's no paper trail. If there is a paper trail, if you pay for it out of your bank account, maybe a family member gave you a gift and we can get documentation to show that they gave you a gift for the earnest money, then you do get credit for it. If you don't get credit towards your closing costs, it's not like that money just goes away. You actually will get a refund for the earnest money after you pay your closing costs, but you have to bring more to closing because you don't get credit for that. So it makes things a little bit complicated. So let's talk about an example. If the house costs $200,000, well, the earnest money is usually about 1%. So that means you would put $2,000 as that earnest money deposit, they call it. Now, earnest money, excuse me, sorry, I had a little glitch there in the audio. Earnest money does get credited towards your closing costs. It does get credited towards your closing costs, so keep that in mind. Here's just a quick example. If the estimated cost at closing that you have to bring is $7,000, the earnest money that you put down is $2,000. That means that the total cost you have to bring is 5,000. 7 minus 2. Second upfront expense is an appraisal. The appraisal must be paid up front. The appraiser does not work for us, so therefore they're a third party, they're independent, and so they want to make sure that they get paid, that they don't go out there and look at the property and then all of a sudden the deal falls through and then they never get paid. The appraiser is only concerned with the market value of the house. They don't care if the electrical, the wiring, the plumbing is working. They only care about how much the house is worth. Now, the typical fee is $700, and this does get credited towards your closing costs, just like the earnest money. Finally, the inspection. The inspection must be paid up front. It is not required by the lender, but it is highly, highly suggested by your realtor. So they're almost going to put you in a headlock to force you to get an inspection because it is very, very much recommended. It's usually about $300 to $400. The inspector evaluates the functionality of the house. Is the electrical, the plumbing, the HVAC, is everything working properly? Is the house in working good condition? They don't care about the value of the house. They're not trained for that. They're licensed to be an inspector, not an appraiser. Now remember, the inspection does not get credited towards your closing costs. The earnest money does, the appraisal does, but the inspection, because it's not required by the lender, it doesn't get credited towards your closing costs. So, worst case scenario, if the deal falls through, if you back out of the contract and you paid for those 3 upfront expenses, you will get a refund for your earnest money, but the appraisal fee, you don't get a refund for that. You're paying somebody for their work, and then of course the inspection also. No matter what, you don't get credit for it. So just keep that in mind. Let's talk about the loan process. Just a few general characteristics. The loan process takes about 30 days from contract to close. So the day that you go under contract would be day 1. The day that you sign your papers and get your keys would be day 30. On average, about 30. We can close sooner. Sometimes it takes longer, but on average, about 30. It can sometimes take a while to find that perfect house. So please don't get discouraged. If you go out there, you look at a bunch of houses and none of them, check all your boxes, eventually you will find that house. Please talk to me before you go looking at new builds, is what they call them, or new construction. There's a lot of builders out there. I know a lot of the builder sales representatives that work with the builder, and if you talk to me ahead of time, there's a good chance that I can still keep your loan with me, still get you the same awesome interest rate and the same great loan program, and that builder won't, try to take you away and try to force you to use their lender, which would be a complete stranger, and you never know how they could possibly mess up your loan. So talk to me ahead of time so I can try to arrange that. Continue to send me pay stubs and bank statements throughout the process. That way there's no delays whenever you do go under contract. This is important right here. Do not change anything regarding your income, employment, assets, or credit. Keep everything the same because right now you're pre-approved. If you tweak it, if anything changes even in the slightest, you go and get a new car, get a new truck, it could completely disqualify you. So let's keep everything the same until you get your keys. Let's be honest with each other. I'm going to be honest with you. This process is stressful. I'm not going to tell you it's going to be rainbows and sunshine and butterflies. It can be stressful. There can be times where you're like, man, is this really necessary? Do we really have to go through all these hoops? Buying a house is hard. It is. It's not easy. If it was easy, then everybody you know would be a homeowner. And that's why not everybody that you know is a homeowner. Only a few people that you know own their own home. So just remember, this is one of the most important life decisions that you will ever make. And so it is important. It is a big deal, and we'll treat it like that. But I promise you, the stress will only be temporary. We'll get you to that finish line. Visionary Home Loans is here to help. And that is it for the video. Again, here's the QR code to schedule your pre-approval meeting. Here's my contact information. If you need anything at all, I'm only a phone call, a text message, an email away. Thank you so much for letting me help you on this journey, and I look forward to getting you your keys. Have a good one. Bye-bye.